In this video, we'll see exactly what is mutual fund. So before you make an investment in mutual fund, it's very important for you to know how mutual fund is getting created, how do you make money from mutual fund, and what commissions you'll have to pay to the mutual fund company, and then finally, what types of mutual funds are there. So if you understand all this, then you'll be very confident on what is a mutual fund, and then you can go and make a decision on should you buy mutual fund or is there other investment opportunities I have apart from mutual fund. Mutual fund is an investment product which collects money from various investors. So you and me also could be an investor here. So they collect money from various investors and use that money to buy shares and bonds. Once they buy shares and bonds, if the value of shares increase and if the bond give good returns, the overall investment value would increase, thereby you could make a profit. That's the whole idea of a mutual fund. So who can start a mutual fund? To start a mutual fund, one needs to be a registered company with strong financial experience. For example, if you're starting mutual fund in India, you will have to get approval from SEBI. Similarly, if you're starting mutual fund in USA, you have to get approval from SEC. Now, these approval or these regulatory bodies will have a lot of stringent rules. Only when you clear all these rules, you'll get an approval. Once you have the approval, these companies can start mutual fund. And the companies which have or which manage mutual fund or which start mutual fund are called asset management companies. So if you buy a land is an asset. Similarly, here mutual fund is an asset because it is of some value and the value could go and increase because the shares and the bonds will give good returns or are supposed to give good returns. So the companies which manage mutual fund are called asset management companies. And if you see here, this is a list of all asset management companies which are there in India at this point of time. So asset management companies create new mutual fund. Now the asset management companies will need money to buy shares and bonds. So how will these asset management companies get money to buy shares and bonds? So the asset management companies to raise money issue something called NFO. NFO is called new fund offering, which is similar to an IPO in share market. So using NFO, they offer a share of the mutual fund in exchange to money from the investors. Let's say the NFO is priced at 10 rupees per share. The pricing is determined by the AMC. So let's say they are pricing at 10 rupees per share. And if I'm investing 5,000 rupees in that NFO, which means I'll get 500 units or 500 shares of the particular mutual fund. Now the AMC has collected a lot of money for the mutual fund through NFO. Now after they have collected this money, who in the mutual fund makes decisions on which shares and which bonds they need to buy? This is where the fund manager come into picture. Every mutual fund will have a fund manager or a couple of people who are fund managers. And these guys are the brain of the mutual fund. So any shares and bonds which are bought in the mutual fund are because of these people. They make decisions on which share and which bond to buy, when they can buy share, when they can sell share. So anything with respect to the mutual fund portfolio, everything is managed by the fund manager. So if your mutual fund is giving good returns, it's because fund manager has invested in shares which is giving good returns. If the mutual fund is giving bad returns, which means the fund manager has decided on buying some shares which has not clicked. So your mutual fund performance is always dependent on the fund manager. How AMC earns money? So these asset management companies which create new mutual fund are doing it because they want to earn money. They are not charitable company. So which means they want to earn money. So how will they earn money? By getting your money. So what happens is whenever you try to buy or sell a mutual fund, they take a commission. That commission is profit to them. Apart from that, they have other commissions like management fees, admin fees, advertising fees and other fees. So all this together is called expense ratio. And these are paid annually. So as long as you are holding mutual fund, every year you have to pay expense ratio. And it would vary between 0.6 to 2.5 or 2.6%. So next time you are buying mutual fund, do watch out for expense ratio because that's the commission you will have to pay to the asset management companies as long as you are invested in the mutual fund. So how mutual fund shares are divided? Let's say through NFO at 10 rupees per share, they were able to collect 1000 crores, which means the assets under management or the value of that particular mutual fund is 1000 crores. So generally the value of a mutual fund is also called the asset under management, which is the total value of the mutual fund. Now if you divide 1000 crores by per share value, which is 10, you will get 100 crore shares. So this particular mutual fund here can be divided now into 100 crore shares. So what is the value of per share? If you divide 1000 crores by 100 crore, you will get 10 rupees. 10 rupees is the value per share. So the value per share is also called net asset value in mutual fund terms. So that is the amount of money you have to pay if you want to buy one share of a mutual fund. Now let's say after a month or after a couple of months, the mutual fund value has gone up because the shares have gone up, the bonds have given good returns, and 1000 crores have become 1030 crores. Now out of this 1030 crores, let's say 10 crores is the expense ratio, and that is the profit to the AMC. Now the value of mutual fund or assets under management is 1020 crores. Now if you divide 1020 crores by total number of shares, which is 100 crore shares, you will get 10.2. As you can see, the net asset value at NFO was 10 rupees, now it is 10.2 rupees. So if an investor has invested 5000 rupees during NFO, he would have got 500 shares. Now if a new investor is investing after the NFO, now if he's invested the same 5000 now, because the net asset value is 10.2 now, the number of shares he would get is 490 shares. But remember, net asset value is not of a big significance in mutual fund terms. The reason being, you only look at how much percentage increase you get. Let's say you invested 1 lakh either at NFO or after NFO. Let's say it's giving 30% returns. So which means your 1 lakh would have become 1,30,000. So what matters is how much your money has increased, not the amount of shares you hold. This is a sample mutual fund, which is a multi-cap mutual fund. As you can see, the net asset value here is 159.9 rupees. And if you see the CAGR, which is the returns which it has given in the past 1 year, it has given 33% returns, which means had you invested 1 lakh then, now it will become 1,33,000. And if you see at the bottom, you have exit load. Exit load is nothing but how much of money you have to pay whenever you sell your mutual fund. Let's say your mutual fund value is 1 lakh. When you are selling your mutual fund, you have to pay 1000 rupees as commission to the AMC, which is the AMC profit. Then you have expense ratio, which is also the AMC profit, or the way AMC makes money. So here the expense ratio is 0.8, which means as long as you are holding the mutual fund, you will have to pay 0.81% annually. So if you are holding 1 lakh mutual fund value, every year you will have to pay 800 rupees as commission to the AMC. So that is how AMC makes money. So do watch out for expense ratio next time you are buying a mutual fund. So how investors make money? So how you and me, if we have invested in mutual fund, how do we make money? So let's say we have invested 1 lakh, and after some time the market has gone up or the bonds have given good returns, it will become 1,20,000. We can just sell and we can exit, which means we can take that 1,20,000 and come out. So that is one way to make money. And the second way to make money is, let's say you don't sell any shares, but the overall value of the mutual fund has gone up because the shares which the fund manager has bought has given good returns. So let's say initially it was 1000 crore, now it's become 1400 crores, which is very good returns for fund manager. So what he will do is, he will sell some of the shares, some money he'll keep it to buy more shares, some money he will give it to the investors. So that's a way to make money. And the third way is through dividends. Let's take an example here. Let's say I have 100 shares of Infosys, and Infosys has made good profit, and they are giving 10 rupees per share as dividend. So which means I hold 100 shares, 100 into 10 would be 1000 rupees. Now without me selling any of my shares, I'll get 1000 rupees in my bank account. So this is the dividend money. So dividend is nothing but the profit is distributed or shared to the shareholders. So whoever is holding the company's share, they will get a profit percentage. So here mutual fund will also hold some company shares, which means whenever the company declares dividend, they will also get some profit share because they hold some shares of the company. So that money they are getting without them selling any of the shares, and they can distribute that money to the investors. The types of mutual fund. There are different types of mutual funds. So it depends upon what they are investing in. Let's say some mutual fund invests only in shares, then it's called equity based mutual fund. If they're investing only in bonds, then they are called fixed income mutual funds. Then there's this hybrid mutual fund which invests in both shares and bonds. And the funds which are only investing in share market, the equity funds, again are classified as small cap, mid cap, large cap, multi cap. So basically, if you take Reliance or Infosys, they are all large cap companies. Likewise, if you take IDFC First, they are all mid cap companies. So depending upon the type of companies they invest, you can also classify as the type of mutual fund. If they are only investing in large cap companies, then they are called large cap funds. If they are investing in multi cap, which means they invest both large, mid and small, mixed of all, then they are called multi cap. So it's again classified depending upon the type of investment they make. Then you have fixed income, which is just bonds or debentures where they'll give fixed income. For example, bond is nothing but you are given that after 1 year, according to the bond, that you have to pay 10% interest for the money you have taken. So let's say I've invested 1 lakh, which means after 1 year, they have to give me 10% interest, and they will keep giving this interest depending upon the tenure. Let's say bond is for 5 years. So every year I'll get 10,000, and after 5 years, they'll give the initial investment, which is 1 lakh. So bond is fixed income. So fixed income will have generally low returns, but they are all constant. Then you have hybrid, which will invest both in equity and bonds. So they want to get benefits of both at the same time, lowering the risk. Then you have two other classifications of mutual fund, which are called closed-ended and open-ended. Closed-ended mutual funds are mutual funds where you can only buy during NFO and there's a lock-in period. You will have to wait till the lock-in period is over to get back your money. Open-ended mutual funds are mutual funds where you can enter and exit anytime. You can enter at NFO, you can enter later, you can sell anytime. So there's no lock-in period. And should you invest in mutual fund? It all depends upon how much knowledge you have. For example, if you are interested in share market, if you are spending some time on what is happening in the market, the best way to do is go open your Demat account, buy shares and bonds by yourself. But if you think you don't have time, then mutual fund is a way, because there will be somebody who is taking care of your investment. And what type of mutual fund can you invest in? I'm sure nobody can tell you what you can invest in, because if everybody knows that this particular mutual fund is going to give a good returns, then everybody will be invested there. Because nobody knows which would give a good returns, so there's no definitive answer on which is the best mutual fund to invest in. How to buy mutual fund? There are two ways. One is you can go to the asset management company website and go and buy directly, or you can buy it from your Demat account. So Demat account will also have a list of all mutual funds. That's all about mutual funds. Thank you.